becoming a smaller world, a more interconnected world. So at some point, the global population is going to have to decide what medium of exchange are we all going to agree upon to be that medium of exchange that you and me can share our energy between each other with. And it's not going to be an asset that's controlled by any central government or any central bank, right? It needs to be an asset that's not controlled by anybody, accessible to everybody.
The history of money and all these different multifaceted areas tied together with cryptography. This idea of liberty and human rights is just kind of information, right? It's like this First Amendment, the freedom of expression, the freedom to transact is almost an extension of that.
Completely.
Being in the options markets, what do you see that's in having the experience and seeing all these different commodities trade? What is similar with Bitcoin option markets, and what is different?
Since we are still in this adoption phase of the asset, the price swings are very volatile, right? When you put a Bitcoin chart up and you put another asset chart, like let's say crude oil, for example, the crude oil swings are much more constrained, right? Generally speaking, Bitcoin chart looks a lot more up and down, right? So that being said, when an asset has high implied volatility, the option contracts on that asset are expensive. And this is due to the probability that Bitcoin can go to 80,000 next week, or it can go to 50,000 next week, right? Those are elevated probabilities relative to other asset classes. So these options are expensive. And what that does is it allows us to say, as Bitcoin holders, we can begin to sell optionality, and we can start to generate income and generate revenue on a monthly basis while we're holding our spot Bitcoin position by utilizing these selling call options, which we can talk about a little bit, or selling put options if you're looking to establish a Bitcoin position. If you have dollars, you can go sell put options. When you sell a put option, you're obligated to own the asset at a certain strike price at a certain expiration date.
If I participate in this contract, do I have to send it to a smart contract? Do I have to send it to you guys? Does that Bitcoin just sit there and wait until the expiration date of the contract? How does all that work?
Yeah, these are good questions to ask. So there's a collateralization mechanism. So let's say I want to sell one Bitcoin call option. I need to deposit 0.25 Bitcoin to collateralize that position. Same thing when you're selling a put option. And typically when you're selling a put option, your collateral asset is dollars because you're obligated to purchase Bitcoin. Again, these collateralization mechanisms and ratios are venue dependent. So always need to understand what the rules are of the venue you're trading with, but that's generally the basis.
Okay, so you have to put up 25% of the position and kind of lock it up to that.
I think that's a good number to think about as to what it means by collateralizing a short option position. If you own Bitcoin, you can sell a call option, which is the right to own the asset at a strike price at a predefined expiration date. Or you can sell it if you have US dollars that you want to deploy and buy Bitcoin, you can sell cash secured puts.
I am here at the Bitcoin Day conference here in Nashville, day 2 of the conference. RFK Jr. just had a fantastic speech. I'm here with my friend John Devine. We're going to talk a little bit about the conference and also about his new book, Bitcoin Options. So with that being said, welcome, John.
Oh, thanks, Matty Ice, the man, the myth, the legend. I'm here in the flesh with him, ready to talk Bitcoin with all of you. The conference is fantastic, isn't it? Is this the best Bitcoin conference you've ever been at?
This is definitely up there.
It's up there.
Miami has always been fantastic. This is really cool. It's a different experience. I think it's a good idea that they moved it to the center of the U.S. for a little bit, just change the scenery a little bit.
Completely agree.
Florida, I'm from Florida, so I'm biased.
You're a little biased.
Great red state, great economy, a lot of good stuff happening there. And I hope they do come back to Miami in the future. And but it is cool to check out Nashville, the city of music. It's pretty awesome.
100%. It's electric here. I mean, obviously there's been a massive shift in the political landscape around our industry. I think you can feel it full force here, right? I mean, we just heard Robert F. Kennedy Jr. talk. Donald Trump's talking tomorrow. Wow. If you'd have told me that 3 months ago, that Donald Trump or anybody leading the presidential race as candidates would be talking at Bitcoin conference, I'd have said, no. You know what? Here we are.
They almost completed the trifecta. They almost had Kamala Harris too, but
wouldn't that have been something?
Yep, she backed out the last minute apparently.
I don't know what to say about that. I got no comment anyway. Yeah.
So talk to me a little bit about block fills and why you wrote this book. And
Sure. Yeah. So just to refresh, I'll give you a little background on me as to why I wrote a book about Bitcoin options. Background is I was a high frequency trader in Chicago and a market maker at the Chicago Mercantile Exchange and the Intercontinental Exchange. I made markets in precious metals, gold, copper, silver, platinum, palladium. I made markets in volatility products, interest rate swaps, and energy markets like crude oil, natural gas, gasoline, and diesel. My journey to Bitcoin really was accelerated when the Chicago Mercantile Exchange launched a futures contract for Bitcoin. That happened back in December of 2017. For all you Bitcoiners out there who've been involved for a long time, we remember that was the top of that massive bull run in 2017. But what it did to me is it encapsulated the idea that Bitcoin's not going anywhere. Because if you can penetrate that regulated futures market and really kind of breach, from the obscurity into traditional finance, there's no turning back at that point. So that was kind of the signal to me. I better open up some textbooks. I better listen to some podcasts, get educated on this stuff. And look where we are today. I mean, now we just had an ETF launch, earlier in the year for Bitcoin. Of course, we've seen one now for Ethereum. This asset is a cornerstone of finance now, and it's something that really cannot be ignored anymore by any type of asset manager, and that's what makes this so exciting.
So I guess my first question is, what initially got you interested? If you're doing all these different options contracts for all these commodities, what got you interested in Bitcoin?
Yeah, so my background is in energy systems and fuels management. And the more you go down the Bitcoin rabbit hole, you begin to realize that Bitcoin is a battery. Bitcoin is human energy storage, all right? It's human energy storage available for transfer on a peer-to-peer basis without any third-party intermediary telling you can or cannot transfer your human energy, right? I think as we continue to go along this growth curve in Bitcoin, it's going to become obvious that it's a human right for us to be able to exchange our energy, our stored time, energy, and effort between each other without having someone tell us we can or we cannot do it. In the current situation that most people live with, we have our savings account in our bank, and that bank can turn you off, or that bank can tell you can't send your hard-earned money to a venue that you'd like to, right? And eventually, we're all going to have the scales removed from our eyes and see that centralized control is really it's really an angle against the eventual interconnectivity and unity that all of us human beings on planet Earth should be experiencing with us in harmony.
It's really wild that, I meet so many different people, you included, just people come from different areas, different, walks of life, different businesses, and they kind of like discover Bitcoin and they're like, holy shit, there's something like super powerful here.
Yes.
There's something deeply philosophical, with these concepts and ideas and the game theory and the history of money and all these different multifaceted areas tied together with cryptography that really, add to the human experience and the this idea of liberty and human rights, where this idea of this is just kind of information, right? It's like this First Amendment, the freedom of expression, the freedom to transact is almost an extension of that.
Completely agree.
And it's super fascinating.
That's actually, so like, this book's about Bitcoin options contracts, but it's also about the option of Bitcoin. Okay. So really, the first chapter of this thing is answering the question, why are we talking about Bitcoin in the first place? So I try to bring the story, together, not just to focus on the application of Bitcoin options contracts, which is highly advantageous for anyone who owns the asset, or is planning on owning the asset, but getting to the root cause of why Satoshi Nakamoto created Bitcoin in 2009 at the end of the great financial crisis. Going back to that time, we had that protest on Wall Street, right? It was the 99% angry at the 1%. We felt like the deck of cards was stacked against the average person, and there was demand for accountability, and we never got that accountability. And when we were going through that Occupy Wall Street movement, what was the lever that we could go to aside from dollars? And at the time, there just wasn't a lever to pull. Yes, you could go to gold, but we all know the headwinds that gold has. It's very hard to store. It's expensive to store. It's hard to transfer between two people. Say we want to share our energy with each other.
Prone to centralization.
Exactly. It's also very concentrated and centralized. And guess who owns a lot of the gold? The banks, right? So out of 2009, thankfully, we now have a lever to pull to really vote with how we store our time, energy, and effort. Instead of storing that time, energy, and effort in US dollars in a savings account that gives you an interest rate that doesn't even beat inflation, we now have an asset that we can opt out of that traditional system and go towards.
Well, it's by design. That's, that allows them to be able to print and just sort of steal from people. And RFK Jr. just sort of pointed this out, that it ends up affecting the poorest people the most. And it's a sad
the system
benefits the people with assets that are going to appreciate against them.
Of course.
This is obvious,
Of course. But really, this is why we're talking about Bitcoin, right? It's extremely important to nail on this subject. the traditional system we've all become accustomed to living under is designed for inequality. Okay, where Bitcoin is accessible to everyone. It's designed to become a more equal society, a global society, interconnected, right? And we all need to, think about this as we're marching along this technological innovation curve. The globe is getting smaller. Travel all around the world is much easier. The flow of information is much easier. We're becoming a smaller world, a more interconnected world. So at some point, the global population is going to have to decide what medium of exchange are we all going to agree upon to be that medium of exchange that you and me can share our energy between each other with. And it's not going to be an asset that's controlled by any central government or any central bank, right? It needs to be an asset that's not controlled by anybody, accessible to everybody.
I mean, and again, at the end of the day, I think personally Bitcoin is inevitable to be that asset. I mean, it's if you look at the game theory and how things are playing out, I mean, this is, you can fight the tide of the ocean and push against it, but those waves are going to keep coming, and I think that's the direction we're heading here. I think this is inevitable game theoretically for the long term.
Completely agree. And at the very minimum, what Bitcoin does is it provides that opt-out lever, and it incentivizes the conversation to have that we're having right now, which before Bitcoin was a very difficult conversation to even begin. Where would you start? Okay, if you don't have a solution, don't talk about the problem, right? And now we have a solution to the problem, so we can expand our knowledge together, and we can talk about Bitcoin.
So being in the options markets, what do you see that's in having the experience and seeing all these different commodities trade? What is similar with Bitcoin option markets, and what is different? What do you notice?
So the low-hanging fruit answer to that question is the implicit implied volatility of Bitcoin. Since we are still in this adoption phase of the asset, the price swings are very volatile, right? When you zoom out in a Bitcoin chart, you see prices go way up and they go way down. And what we say about that is it has high volatility. If you reference that chart, you put a Bitcoin chart up and you put another asset chart, like let's say crude oil, for example, the crude oil swings are much more constrained, right? Even though we do have moments of high volatility in crude oil, for example, generally speaking, Bitcoin chart looks a lot more up and down, right? So that being said, when an asset has high implied volatility, the option contracts on that asset are expensive. And this is due to the probability that Bitcoin can go to 80,000 next week, or it can go to 50,000 next week, right? Those are elevated probabilities relative to other asset classes. So these options are expensive. And what that does is it allows us to say, as Bitcoin holders, we can begin to sell optionality, and we can start to generate income and generate revenue on a monthly basis while we're holding our spot Bitcoin position by utilizing these selling call options, which we can talk about a little bit, or selling put options if you're looking to establish a Bitcoin position. If you have dollars, you can go sell put options. When you sell a put option, you're obligated to own the asset at a certain strike price at a certain expiration date. Give you an example. We're trading at 67,000-ish right now, right? It's July 26, 2024. There's an options market for August 30th. That's the last Friday of August. That's next month. I can go sell a put option with a strike price of 60,000, which obligates me to buy Bitcoin at 60,000 on August 30th, 2024. And I can get paid a yield either in dollars or in Bitcoin for that obligation to buy the asset at that strike price. That's a very interesting idea for someone who wants to either dollar cost average into Bitcoin, or someone who just wants to buy Bitcoin in general. Instead of buying spot Bitcoin at 67,000, you can go look to sell put options, which obligates you to own the asset, but you get paid a yield for that obligation.
Okay. So I know our teams have talked a little bit in the past, because we are largely a mining company, and we have these assets on our balance sheet. What is the risk? And again, I'm fuzzy on how all of this works in the weeds. I'm not ashamed to admit it. It seems very complicated to me on a lot of fronts: options, and put options, and call options. And I know a little bit, but before I act upon it, I'd like to really know, hey, what is my potential downside risk here? What is my upside risk here? What is the upside potential? And where am I at here? How much could I lose? What are your thoughts there? What could you tell me?
Yes.
As an owner of a company who's engaging in this?
Of course. And so, of course, anything I'm talking about here is certainly not financial advice. This is for educational purposes only, right? But when I think about risk with options, when I talk about strategy, I'm talking about covered options. And what I mean by that is, if you own Bitcoin, you can sell a call option, which is the right to own the asset at a strike price at a predefined expiration date. Or you can sell it if you have US dollars that you want to deploy and buy Bitcoin, you can sell cash secured puts, which we just talked about. And let's use the example of the cash secured put. Let's say I have US dollars on the sideline and I want to go buy some Bitcoin. Today I can go buy Bitcoin at $67,000.
Okay.
Or I can go sell a 60,000 strike put option that expires on August 30th. I'm now obligated to buy Bitcoin at $60,000. I already want to buy Bitcoin, right? I'm now obligated to purchase the asset at $60,000. The risk or the opportunity cost, which I more like to frame it that way, is if Bitcoin goes to 50,000 by August 30th, right?
Then you still got to pay 60,000 for it.
Of course, you still have to buy the asset.
But you're still getting it cheaper than you would today if you wanted to buy it.
Of course. And so this is why we think about risk when we're talking about covered options positions. We think about it as opportunity cost. If I went to buy Bitcoin today at 67,000 and the asset went to 50, well, now I have a loss against me, right? Now I have a US dollar loss, which, you know, if you're talking to a real Bitcoiner, we're not talking in dollar terms anyway. But if I sold that put option at 60,000 strike, I have an obligation to buy at 60,000. Were Bitcoin to have gone to 50,000, sure, I could have just held my dollars and tried to time the market, and I could have bought it at 50,000. But when Bitcoin's trading at 67,000 today, we don't have a crystal ball. Of course, right? That's the idea.
Interesting.
The other one's the upside, right? So I just talked about selling put options, but selling call options is the other side of it. A call option is the right to own the asset at the strike price at the expiration date. So let's say I own Bitcoin today at $67,000.
This would be more relevant for someone like
this would be like for a miner, a Bitcoin holder, someone who owns the asset. I own this Bitcoin, but I want to generate yield. I want to create income, passive income on a monthly, weekly, daily, whatever your basis is. I can go sell the 80,000 strike call option that expires on August 30th, 2024. Bitcoin's trading at 67,000 today, right? When I sell that 80,000 strike call option, I'm now obligated to sell my Bitcoin at $80,000 on August 30th.
I got you.
As we both know, Bitcoin has never traded to $80,000. It could. And on August 30th, it could be above $80,000.
So the market is kind of pricing that in, that they think August 30th, you know, the futures markets are kind of saying, we think we're going to be at $80,000.
Well,
is that the logic?
Not necessarily. The logic is I own this asset and I'm happy to sell it at $80,000 on August 30th. And if I sell a call option, I can generate income because someone's going to pay me a premium cost to own that right to buy my Bitcoin at $80,000. So now I own this asset. I'm selling what we call covered calls every month, and I'm getting paid a premium for an obligation to sell the asset at a higher price than it is today.
Okay, gotcha.
That's the idea.
So you collect a payment for giving that option, and eventually, if you do have to sell it, you're still getting a gain, but it might not be as much as you would have expected.
Yes, because on August 30th, 2024, Bitcoin could be at 85,000.
So you lose out on that $5,000 upside, but you got that guaranteed payment up front.
That's
and
exactly
you still
right.
You still got $13,000 of profit.
That's correct. I have an obligation to sell at 80,000 no matter where the price of Bitcoin is.
So what happens with, do I have to, if I participate in this contract, do I have to send it to a smart contract? Do I have to send it to you guys? Does that Bitcoin just sit there and wait until the expiration date of the contract? How does all that work?
Yeah, these are good questions to ask. So going into it, you know, the company I'm with is Blockfills, and we serve the institutional market, right? We serve eligible contract participants who want to transact in spot options, futures, forwards, lending and borrowing agreements. So there's a collateralization mechanism. So let's say I want to sell one Bitcoin call option. I need to deposit 0.25 Bitcoin to collateralize that position. Same thing when you're selling a put option. And typically when you're selling a put option, your collateral asset is dollars because you're obligated to purchase Bitcoin. Again, these collateralization mechanisms and ratios are venue dependent. So always need to understand what the rules are of the venue you're trading with. But that's generally the basis.
Okay, so you have to put up 25% of the position and kind of lock it up to that.
I think that's a good number to think about as to what it means by collateralizing a short option position.
Okay, so what would happen, say, if an individual did a contract, they put up 25%, but then eventually they got called and they didn't have the funds? How do you guys rectify something like that?
So I don't like even talking about this because everything I'm speaking on is covered, right? So if I have if I'm selling a 60,000 strike put option that expires on August 30th, 2024, I have $60,000 available to buy Bitcoin, right? What you're referring to is more speculation, which I don't like to get into at all. And again, on the upside, when I'm selling a call option, I'm only selling a call option on the quantity of Bitcoin I already own. Okay, so really when you think about collateralization ratios, we think more about that in terms of counterparty risk because I already own the asset that I'm obligated to fulfill on the contract, but we can use collateralization ratios to manage my counterparty risk with the venue that I'm interacting with.
Okay. We'll have to go deeper down the rabbit hole on that.
It's a little
trying to understand everything. This is a whole world that I'm not part of, and
And look, here's the beauty of it.
Super sophisticated.
Yeah, it's okay. And look, this is why I wrote the book.
Yeah.
Because I've done a lot of these talks, right, where we kind of get back and forth and you get into the weeds a little bit and you get a little bit turned around. And so now, hey, with Bitcoin options, energy storage, risk management, real yield, you can go at your own pace. You can digest this stuff at a pace that's appropriate for where you're at. And hopefully it encapsulates all the questions you have about options markets.
In your book, you talk about this concept of a decumulator. Can you go into that? Can you provide a layman's explanation for everybody here?
Sure. Okay, so a decumulator, well, this is advanced, I would say, optionality. Actually, the title of the chapter that talks about decumulators and accumulators is called exotic optionality. This is the absolute bleeding edge of Bitcoin derivatives markets. But I'll give the example of a decumulator because it does align with the risk management strategy a Bitcoin miner may deploy. So a decumulator is a contract that you can enter into. And let's say Bitcoin, I'll give you an example. It's the best way to explain it. Let's say Bitcoin is trading at $67,000 and I enter into a 90-day decumulator. Okay, so, and on the decumulator, I'm going to sell my asset let's say every 7 days. The current price of Bitcoin is $67,000. I can have the right to sell Bitcoin at $72,000, let's say, every 7 days for the next 90 days, right? But there's always a caveat. If Bitcoin were to trade, let's say, below 62,000, the contract would expire. Okay. And why is this interesting? Well, Bitcoin is trading at $67,000 currently. And if I enter into this decumulator contract, I now have the right to sell whatever the cadence is, typically every week, at $72,000, which is above today's price, right? Yeah. So that's why it's interesting for maybe a Bitcoin miner or someone who has a schedule of selling the asset on a regular basis for whatever reason that might be. Could be someone who owns a lot of Bitcoin and they'd like to have a scheduled sale into dollars. And that's an interesting product to get into. There's a bunch of different nuances with these exotic options. They are really advanced products for professional traders or for treasury managers, I would say. But they are certainly something that's interesting to understand because this is happening in the market and it's currently, I would say, at the infant stage for Bitcoin, but it's a very common structure in traditional finance.
Gotcha. So I know for us as a mining company, a lot of times we have to sell to pay, certain people that only accept fiat. Of course. Right? Energy companies are prime example. Of course. We know every month kind of when that's going to be. Would this be a tool or a strategy that we could use more like a monthly basis or something like that?
This is something that your treasury manager would take a hard look at and they would understand, how does this fit into the way I want to manage my balance sheet, right? Yeah. One of my, it's a little bit more of I would say a vanilla option strategy that accomplishes a similar goal is what I call a zero cost collar or a risk reversal. So I'll give you another example. We're trading at $67,000. I'll go back to that short call option we talked about earlier, the 80,000 strike August 30th, 2024 call option. As a treasury manager, I may say, look, I want to sell that call option and generate yield for my position. But instead of taking that yield I earn from selling the option and having an obligation to sell at $80,000 on August 30th, 2024, I can take that yield premium payment and I can go buy put options. And a put at zero cost with whatever premium I have, I'm going to go buy a put option that I can get for zero cost based on the premium I earn from selling the 80,000 strike call option. And what that does is it locks in a sale price. Because when I'm a buyer of a put option, I have the right to sell Bitcoin at that strike price on the expiration date, right? So you start to think about this. If I'm long spot Bitcoin at $67,000, I can sell that 80,000 strike call option, which obligates me to sell at 80,000. And then I can go buy a put option at zero cost with the premium earned from selling that call option. And that allows me to lock in a price I know I can sell my Bitcoin at no matter how low Bitcoin goes.
Okay. Interesting. Very, 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 very interesting.
Yes.
Yeah, we're going to have to
This is a very common strategy, I would say, for gold miners, for example, crude oil producers, and eventually, I would say it's already beginning to happen and it has been going on for a couple of years now, but eventually the Bitcoin mining community, which at the end of the day is a commodity producer, are going to be deploying these type of tactics into the market.
Yeah. Well, it's very interesting to see these markets evolve for Bitcoin, a growing, asset class, right? So we're still at the very beginning of all this, but it is very fascinating. And, kudos to Blockfills for providing this service and filling in, right? We all come and we all provide what we can. We all, have our own unique experiences and how can we plug into this network? How can we support this network? So
that's right.
Thank you, John. Kudos to you guys, for doing that. And I guess my last question that has to do with your book is, You draw an interesting analogy between thermodynamics and financial concepts. Can you explain how the understanding of Bitcoin as like a digital commodity, the principles of thermodynamics, how that kind of like ties in?
Yeah, 100%. So as we talked a little bit about at the beginning of our conversation, is that Bitcoin is effectively a battery. It's a way to store human energy, time, energy, and effort, right? If you look at the first law of thermodynamics, energy can neither be created nor destroyed, only transferred.
Yeah.
Okay. And when we think about what this principle really means, and then you go to our current fiat system, where we have a central bank that is printing money out of thin air, that is in direct violation of the first law of thermodynamics. Energy can neither be created nor destroyed, only transferred. But in our current central bank fiat currency system, these centralized players are able to seemingly create energy out of thin air. And that is a direct contradiction to the natural law. So Bitcoin really brings us back into natural law, away from this ambiguous, I would say, it's hard to even describe the effects a central bank has against the natural laws of physics, right?
It's a very interesting philosophical concept. You're taking something that's like very physics based and then tying it into like human information, which is like kind of fascinating.
That's right.
All Bitcoin is really information, right? It's human, and it's human. It's only valuable to humans, right? Like
that's right. So Bitcoin is really bringing us back into nature, into the natural order of things, right? And when you have a centralized entity like the Federal Reserve, which is a central bank of the United States, and you zoom out, you say, gosh, how has the United States been able to fund and finance warfare all over the world? That doesn't seem very natural, right? How are we able to have military bases in 140 plus countries, right?
Indeed, it really hasn't been natural, right? If you look at the wars throughout human history, the past century has been, 100, 120 years has been some of the most deaths, the most violence we've ever seen. Right? I mean,
yes,
unprecedented scale.
I would
violence.
Yes. So the way that this has been allowed to happen is by the printing and the creation of energy out of thin air, and that is a direct contradiction to the natural law of things. So if as the United States, we have a very important decision to make at this juncture in time. It's really an inflection point. Are we going to choose the path of peace and unity, or are we going to continue down this perpetual warfare path and really a system that's designed for perpetual servitude? And I think that's what I'm getting at when I talk about that first law of thermodynamics. Energy can neither be created nor destroyed, only transferred. Bitcoin brings us back into that realm, and hopefully it really realigns the way our treasury is run and the way we use central banks, and we stop printing money over and over and diving deeper.
It just blows my mind that we understand the effects of communism and how it doesn't work to centrally plan goods and services in the economy, yet for the most important good of any market, this idea of money, it's a communist regime that sort of decides all these things. I mean, the whole thing just blows my mind.
Yes, so I think that's why it's important to begin the conversation of Bitcoin with the laws of thermodynamics. And that's not meant to be something that's designed to frighten people or scare people away from the subject, but really just align people with the idea that Bitcoin is energy and energy storage and transfer.
Wow, that is fascinating when you think about it, right? Because Board essentially is just this massive energy projection of force, and we can spend hours talking about this stuff. But John, thank you so much. This was a banger of a conversation.
Thank you very much. I appreciate you.